Hey, what's happening, guys? Dan Dario here with another Options and Play video update. So I was just speaking yesterday about events. Yesterday was I was referencing Tesla and the deliveries, and then today actually we got another big event we've been watching for, which was Biogen. They presented late last night with their partner phase three Alzheimer's data, and it was a surprising it was a surprising success. Expectations were awfully low for it. People didn't think it was going to work, but it did. And I mean, it was a huge win for patients that need some options in the Alzheimer's space. Also, obviously, it was a huge win for the stock. Just a gigantic gap higher this morning. Also, it ended up working well for our options too, right? And what made me think about it was as we get closer to earnings season, we're going to have probably more instances where stocks see these big gaps, and playing options on it, especially if we're in like lucky enough to be in the options that move like well into the money on these gaps. I mean, there are a couple rules I tend to operate by for these like big overnight gaps. So one is if it's like very short term, meaning like the options expire in like a day or a couple days, I tend to work a lot quicker off the open, um, just because my window for error is a lot narrower, right? So when it comes to like a stock that has a gap, say on like a Wednesday, right, and the options maybe expire on Friday, it's like okay, yeah, you do have a couple more days, but at the same time, if you get like a pullback or depending on which direction you're playing or big bounce, I mean, it's really going to impact those short-term options the most, right? So if my options expire very soon, then I'm going to be working quicker to like manage that trade. Also, if the trade is capped, meaning like if the option is a spread, if the option strategy is a spread and the stock is through the top end of the spread, um, that's usually a point where I might say, okay, like I want to close it out and roll up to something higher because I can only make like X amount of that on that strategy because it's a spread, right? Your potential gain is capped, right? So if I think it's like a stock that's going to continue to trade higher after that, sometimes like I'll close out of the spread and then roll up to something further because like I want to be able to capture more upside if that's the direction the stock is going to keep going, right? Um, the one the one time I might alter that is if it's like very 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 deep in the money where I think that there's a very low chance of the stock reversing, then I might try to hold those spreads to try to like max out the value, right? So then I might sit in them and try to realize the full value of the spread versus like getting out right away. Because if I think there's just like a low chance, if it's like 30, 40, 50 points in the money and I'm like, okay, there's really not a very big percentage chance of this pulling back that much, then I might just sit and try to like realize max value. But this is kind of the third thing. I weigh the risk to reward too, meaning so if you open an option position, a call spread that's $10 wide, right? And right now the value is say hypothetically worth like $6 or $7, right? Well, your risk reward starts to look less favorable, right? Because say again, I mean, say like it's a $10 wide spread and it's currently worth $7. Well, you're basically risking seven to only make three. I mean, you can only make three more dollars. That's the max potential value of the call spread, and it's worth seven. So really, you're risking two to make one, right? Because if the trade reverses on you and it turns into a zero, that's $7 that evaporates, and you could only make an extra three on top of it. So, even if I think even if I think it could head higher, right? If I have some doubts and I want to lock in some money and the risk reward is just not as favorable, I might still just take off the trade anyway, right? So these are things to like think about as we get closer to earnings season. You're playing more option strategies and maybe involved in more gaps. You really want to like these things like off the open, especially if you're lucky enough to have a trade move in your favor. It's like, okay, what do I want to do? How do I want to manage this? Do I think there's more potential? How at risk are these options? And what's the current risk to reward on the contracts based off of the overnight gap? All right, so food for thought, but thought it was relevant, especially as we get closer to earnings season. All right. So if you like this video and you're looking for more information about trading events with options, please follow up with the link in the description of the video for more information on options in play. Have a great night. Stay well, and I will talk to you.